Cleantech is a name that's it's almost like nanotechnology that was slapped on an industry when it really is not a single industry at all, but a very a broad definition that goes across a number of sectors. Certainly, probably the largest component of what I'd consider to be clean tech would be renewable energy. But also it goes beyond that into green products, green buildings, efficiency technologies, and grid management, smart grid, efficient vehicles. As to sectors that are particularly hot or interesting right now, where we're seeing a lot of action, certainly wind and solar continue to be attractive and are attracting a lot of dollars into new technologies. Biomass, waste to energy. We're seeing a lot of action, a lot of interest from our clients in new technologies in those sectors. Over the past several years, there's been a great deal of interest, both from new funds being raised that are dedicated to the clean tech sector, but also old line traditional VC funds that might have previously been focused on IT. You see them moving a little bit into clean tech investing as well. I think that trend will continue. A lot more dollars are being invested in the sector, certainly even last year than the previous year. With the announcement of the stimulus package earlier this year, it appeared that there would be a large amount of non-traditional funding, potentially non-dilutive financing available for some of these companies through the stimulus plan. That has proven to be true in a number of cases, and I think it still remains to be seen exactly how that money is going to be rolled out. I think the investment community views it as a value add and is not necessarily making an investment decision based upon the availability of stimulus financing. In certain segments of the financing markets, traditional VC funding is not always readily available. For example, at the really early stage, a lot of the funds have moved upstream a little bit and aren't really investing in those typical seed stage investments. Historically, we've seen angel investors fill that gap. Over the past year, angel investing, I think, was probably hit a bit harder than VC investing. So we certainly have a little bit of a funding gap at that really early stage. With clean tech companies, there's, I've heard to some refer to it as the valley of death, that once you get beyond that typical technology investment for companies that are very capital intensive and are going to need a lot of dollars to, say, deploy a project and actually launch the technology, that funding is not really available right now. The project financing markets still are not back to where they need to be to roll those kinds of large projects out on new technologies. Deal terms in the past year or so have not changed as much as you might have thought they might have, given the slowdown. Investors are looking to continue to keep management properly incentivized. So by putting a 2 or 3 or 4 time liquidation preference on top of management, interests are no longer aligned properly. So while you see the valuation pressures, we haven't really seen the pressure coming to bear on companies in terms of deal terms. The DOE, I believe, has just extended their tax credit program for another year with respect to efficient vehicles, biomass, and certain other renewable energy sectors that will continue to make tax credits an important part of the puzzle when it comes to putting a project together. In 2010, the clean tech sector, in particular renewable energy, will continue to be a very attractive and growing sector for investment dollars. We're going to continue to see a lot of technology innovation at the earlier stage. In large part, that may be spurred on by government regulations, whether it be dollar incentive programs or regulations that just make the overall sector more attractive for growth for those companies and to encourage the growth and to move the country away from a dependence on old line energy sources.